And good morning, good evening, good whatever it is, wherever you are in podcast land. Brendan Cunningham, the real estate doctor here at EXP with me, Matt Paul. He can do it all, but he can't do what this guy does.
No, I can't.
He's just dropped out of the sky. It's another Matt, right?
No,
Matt was last.
Yeah,
Matt
Jim,
last.
come on.
This is Jim. Okay, I'm sorry. Jim Knight.
He had a
Jim
moment.
Knight is the king of appraisers in Western New York. Well, I don't know if he's the king, but we're having a no kings day, so I guess you can't be king. Anyway, but he's here. He's going to talk about the appraisal process, but more specifically, what else does he do? All right, past president of the Association of Realtors. What year?
2008.
8. Okay. He's on the faculty. He also is responsible for bringing in all of the agents when they come into the Association of Realtors to become realtors. He's the guy that does the orientation class. I don't think you call it orientation.
Yeah, we do.
Do you?
Yeah, absolutely. NAR, the National Association of Realtors, calls it orientation. It's required for all new members in getting into real estate.
And he does that. So he does a lot of things, and you're also in commercial real estate.
Yes.
And we can talk about maybe conflicts of interest that come up with that process as an appraiser, because we just want to talk about the appraisal process today. When we do a real estate transaction, there's a lot of people involved in the transaction. In fact, I always like to chuckle. A lot of people don't like football because there's too many people on the field. Same number of people, 22 service providers in a transaction on the average. 2 agents probably, 2 attorneys, maybe 3 attorneys.
3 with a bank, yep.
And then there's the underwriters, and then maybe there's a home inspection. But there's a guy that's really critical to the whole thing, and that's the appraiser.
Mm-hmm.
So here's a question that we were talking about before we went on, because we have a different point of view, vantage point.
Yep.
One of the things that we're seeing is properties are selling over the asking price, and more times than not, we're not seeing appraisal issues, that properties aren't continuing to appraise. Is that true from your perspective?
Yes, up until now. But what we're starting to see, and you can either agree or disagree, but what I'm hearing from my colleagues is that now you're seeing more and more deals, especially because the prices are so absolutely crazy out there. People are paying unbelievable prices. You are seeing some deals being shot down because they're not meeting the value. Once the contract price has been agreed to, it gets the okay with the bank, the appraiser goes out there, all of a sudden the value comes in $5,000, $10,000, $15,000 less. That's what we're starting to see, I believe.
Is that across the board, Western New
I
York?
believe so. Well, no. I believe there are pockets where you're seeing it
Yeah.
more than anything.
Can you give me a percentage? Like, is it 5%, 10%, 50%?
No, it's not that high yet, but I have heard from my colleagues that that's what's happening. Well, first of all, let me explain. I have been doing mortgage appraisal work for years. In the last 5 to 10 years.
The bank sends you out.
Yes, exactly.
Okay.
My client is the bank. Well, in the last 5 to 10 years, I decided, made a conscientious choice. I'm not going to do that type of work anymore. So my appraisal business is specialized. I do matrimonial squabbles. I do
they're always fun.
Divorce situations.
especially when someone comes in with a can of
Oh
beans.
my God.
I do date of death appraisals for estate purposes, either before when they're planning an estate or after someone has passed. I'll do a value that's retrospective, that someone passed away a year ago. I have to come up with a value then. So that's what I do. But I teach the appraisal curriculum to all the new appraisers coming on board. Most of their business is going to be bank work. It's going to be mortgage work. And that's where I'm hearing this from some of these colleagues, as it were, that, some of these it's been harder and harder to make value. It's been harder and harder just because there's got to be a tipping point at some point.
Okay, so you also teach other appraisers.
Yes, I do.
Okay.
If you want to be certified as an appraiser,
You got to go to
there's
this
a
guy.
chance you have to go through me. Right?
Okay.
Wow.
I mean, that's important information. Are you seeing cases where people are buying for cash and then wanting to have an appraisal on the property?
Absolutely. As a matter of fact, a lot of times what you'll see is they'll buy for cash, and then 1 or 2 years down the road, they realize, oh, we might have a real equity pocket here, and let's go to a bank and start to suck out some of our gains.
Yeah.
So they'll do that, and that's when sometimes they get surprised.
Oh, I thought it was worth more.
Mhm.
And that happens. Home equity lines of credit and things like that.
That makes sense because the bank's not involved up until that, the point of them coming to refi or pull a line. So
That's right.
yeah, they really just don't know.
Okay, so we're starting to see some pockets of properties not appraising. One of the strategies sometimes agents use whether they're paying cash or even if they're doing a mortgage, it's a little different in both cases. But they'll say, yes, I'll buy your house. I know I'm paying $100,000 more, but if the property doesn't appraise, I'm still going to buy it.
That's a
Right.
appraisal guarantee, right?
The appraisal guarantee.
As a guy,
And you guys are more familiar with this than I. I don't do residential real estate sales work. I do commercial sales work. We can talk about that in a second. But at the end of the day, I've heard this new product coming about, and it's an appraisal guarantee. And what it does, correct me if I'm wrong, it helps to subordinate the value between what the appraiser comes in at and what the contract price is.
correct.
Exactly.
It's another way of addressing it.
Yep.
But I guess the question I was going to ask is, and you have to put a different hat on, I guess, for this is,
Well, you can't
how
do that.
risky is that?
You can't do that with an FHA, right, or a VA, because
Right.
you can't do a side deal.
Right.
So you're strictly conventional type loans.
Right.
What else?
And cash, but that's
Yeah.
it's not cash is probably not. It's not going to be.
It's never going to be subject to
It's-
appraisal.
yeah,
Yeah,
right.
not to close.
Yeah.
Yep.
Which brings about the surprise down the road if you try to refinance.
Yeah. And you think, you bought it for $350, you think it's worth at least $350, and you learn that's $3.
And
right?
to be honest with you, Matt, maybe it did.
Yep.
Maybe it was worth that then. But
Yep.
we're seeing values change and go about so many. I'm not saying values are coming down, folks. Don't think that
Yeah.
the sky's falling by
Yeah.
any means.
No.
But what we're seeing is the increases start to slow a little bit. You're not seeing the increases maybe we've seen in the last 5 years on a per monthly basis.
Yep.
That's it's kind of slowing down a little bit.
I saw that. I had a client reach out to me that has a condo in the city center right near the Hotel Lafayette. He wanted to put it on the market this month, and I told him, and he noticed too that there's 3 different apartments that were for sale in the building. They've been sitting since January, and the value looks to be right around what he bought it for 4 years ago. And this was, he had high hopes of it being, increasing in value big time because of Bray Miller's market wasn't in at that point. Now they've come and gone. But so there is some pockets that have kind of stayed steady and haven't gone up.
It all has to do with market. What's going on around the property is ever so important. If you're seeing growth around the property, de facto, the value of the property is probably going to go up. You don't have to.
Yep. Infrastructure improvements, all that.
Always.
Yep.
Always.
A lot of times we get asked as agents, come over the house, take a look. I want to get an idea what it's worth. And they'll say, can you come over and do an appraisal on the house? Sometimes the agent will respond and say, oh, sure, where's the house? Let me come over. Sometimes they say, I'll be happy to come over and give you a market analysis.
Yes, that's what I corrected
Okay.
because it's not an appraisal.
It's
But
different.
Yeah. Yep.
How are they different?
Complexity. More than anything else.
More specific information.
I have seen plenty of realtors go out there and do a bang up job coming up with our CMA, comparative market analysis, and they come up with a value that I end up coming up with being very close to, give or take 1 or 2%, and that's fantastic. It really is.
Yeah.
And that comes from working with a realtor who knows the market very, very well. Okay, so in my case, what I do is I research comparable sales like a realtor does as well. But what I do is I need to have a bunch of paperwork I have to fill out to follow up.
Oh, God.
We follow
You
the
got
same
paperwork.
philosophy. Yeah, we do. Oh, yeah, absolutely. We
If I'm not
follow,
an appraiser.
we follow the same philosophies. No question. You're comparing it to other properties that are sold.
You're looking at history.
Absolutely.
Not with the market analysis, they may also introduce the competition. Which I
Competitive.
always think is the more important piece of information.
Well, I see no problem in that too. I look at current listings. I look at current pending sales if I can get the information that's correct on those. But what that does is it serves to explain what the market is doing.
Right.
So it solidifies, it fortifies the market spread. It sets your high and sets your low. The appraisal then brings it closer to the middle, closer to the number that a ready, willing, and able buyer with no duress will end up paying for
The
that.
true market value, more or
True
less.
market value.
And I always heard too that appraisals are a non-biased, opinion. Whereas, if an agent is pricing out a house, they can lean more towards, heavier, higher comps or lower comps and things like that.
Right.
So as an appraiser, you're not attached to either party. You have to go right down the line. And
Absolutely.
Yep.
We have a gospel of an edict we follow, and it's called USPAP, the Uniform Standards of Professional Appraisal Practice. And one of the edicts is we have to be totally unbiased when it comes to looking at a property. We go in with blinders on, even though we're working and many times for a bank. we're not looking to come up with a value to solidify the deal. We're looking to come up with a value as the market shows us. So there's no bias at all.
I can remember having a conversation with an appraiser a few years ago, and the agent, how should I say this polite, but I guess was trying to influence their opinion.
Oh, never.
And I
You want that listing,
and the
don't
agent
you?
told me the story. He says, "Yeah, he says, this guy's all over my. He's in my face, and he wants me to put on the rose-colored glasses." And I always thought that was a funny. Yeah, it's the rose-colored glasses.
Yeah.
I know it's a shack, but it's a beautiful shack.
Yes, exactly. Yeah.
So, yeah, so you do hear some of that.
Well, not only that, you an appraisal is not science. It's not.
It's an opinion.
It's an opinion.
Right.
And my opinion of that 3-bedroom Cape Cod in Chickamauga, 1,300 square feet, might be $170,000. Your opinion might be $180,000. Matt's
Yep.
might be $165,000. Guess what? We all may be right.
Yeah.
And we'd all be wrong.
All be very wrong.
Yeah.
So it's an opinion. One of the other things that's interesting about the role of the appraiser is, and this is where you take all the glasses off.
Yep.
The buyer's agent, well, they have an interest in getting this thing closed
Yeah,
because they
absolutely.
don't get paid.
Unless it does.
Seller's agent, they have an interest in getting this thing closed because they don't get paid.
Yep.
The appraiser doesn't have an interest in getting
Yeah.
it closed.
Nope.
Much like the home inspector, their roles are different.
Yep.
We're going to talk
Yep.
about that next.
Yep.
But they're there to do this job
Yep.
and to render an unbiased opinion,
Exactly.
non-influenced.
Exactly.
Actually,
yeah.
it's stated right in USPAP that I cannot get paid on a contingency. I sometimes, and it doesn't happen often, but sometimes realtors can put a bunch of work into a deal. The deal doesn't close, or they get it for a price that's far less, and they still get a commission somehow.
Some.
Appraisers, we have a flat fee that we charge for the report that we write. It cannot be. We're not going to get paid more because we come up with a higher value. We're not going to get paid less because we come up with a lower
The
value.
number's the number.
It's
The number's the
non-negotiable.
number,
Yeah.
exactly. The market speaks for itself.
And unfortunately, your prices have gone up over the years, like
Yeah.
a lot of things.
Yep.
Realtors' prices, commissions seem to be going down.
Yes.
That's a whole other
Yeah.
thing.
Yep.
Don't go there.
Yeah.
Now, sometimes we have clients or customers, they go and they want to buy a house and they want to have a home inspection.
Yep.
Home inspector is there to assess the property's condition,
Exactly.
Right.
Yep.
not the value.
Nope.
Okay?
Nope.
That's where you come in.
Right, and it's very important because a lot of times the layman doesn't understand the difference. There's some
They
realtors
use-
representatives
There's realtors,
Yep.
they use these terms interchangeably.
and
and
they
they're
really
not.
shouldn't.
They're
And
not.
you hit it right on the nose. An inspector's job is to certify a condition is safe,
Yep.
It's habitable, and those type of things.
Yep. Mechanical
Whereas-
sound.
Whereas I know enough, maybe than a little bit more than the average bear in terms of condition. I've been in so many houses and taken so many classes, but at the end of the day, I couldn't hold a candle to what a home inspector would come up with.
Mhm.
They know far more about condition. I know far more about value and intrinsic nature of what the market is doing and things like that.
Okay, you do FHA and VA appraisals?
I don't anymore, like I said, don't do bank work, but I did.
Okay. So when you did,
Yes.
Okay. Sometimes our clients will say, "Well, why do I need a home inspector? Because the appraiser's going to do
They
that."
see all the time. Yeah.
And I explain, "Well, no, they don't." Could you elaborate?
Yeah, FHA and VA appraisals, and in the past it was actually more stringent, but they are a little more fastidious in the what we look at from an appraisal standpoint.
Correct.
And mainly it's the safety features, like I said. You know, you've got 3 steps up, you've got to have a landing, you've got to have a
Handrail.
grab bar, hand bar, exactly.
Yep.
No peeling paint, no broken windows and things like that. Over the last, I would say, 10 years or so, you've seen conventional mortgages and the requirements for them in appraisal
Similar.
and FHA, they're becoming closer together, exactly.
Mhm.
But with FHA, there's certainly more.
Which is why sometimes we're seeing buyers that have applied for FHA mortgages when they're in a competitive situation. The seller will say, "No, I'm not going to take your offer. I'd rather take the conventional mortgage
Yep.
because I'm not going to have to go through this extra
Yep.
screening,
Yeah.
whatever the word
You're a
is."
little more, like I said, fastidious. You're looking at the
Fastidious.
property in a little more.
And because if they look at it with a little more depth, then they go back to the seller and say, "Listen, somebody has to fix these
Yes.
items."
Yep. Yep.
And sometimes the seller just wants a clean deal. I want to get out of Dodge. I don't want to talk about anything.
Yep.
You want a home inspection? Not interested.
Yeah. You don't want to negotiate again.
Clean. But
Yep.
these are factors.
Yeah. Absolutely.
Granted, there is more cash than there used to be,
Yep.
but there's still a lot of people that are using
Sure.
banks.
Oh yeah.
And
Yep.
more so, the scales are still this way.
Yep. Yeah, but you're right. I get that question asked all the time. If I'm doing an inspection, how come there's an appraisal or vice versa? I'm like, well,
Don't they do the same thing?
Yeah, totally not.
No, they don't.
And typically, an appraisal, it takes anywhere from 15 to a half hour, maybe, depending on the size of the house.
Whereas an inspection is
3 to 4 hours.
just a
Yeah,
couple
exactly. So they're pulling panels, they're going on a roof, they're looking in the chimney. So it's a totally different animal.
When I go into a house, I look for damp basements. I look for major cracks in a wall.
Yep.
I look for standing water outside the property, odd smells, faulty wiring. I see that's observable.
Yeah,
I mean,
open connections.
Wet and cracked ceilings and things like that. Roofs that are at least 2 years or useful life left. I mean,
Yep.
those are important things
Yep.
I look for, but certainly not to the same structural questions that
Not to the same
Yeah,
degree.
Absolutely.
Yeah. Yep.
Drive-by appraisals.
During COVID.
What's that about? Is that a good thing? Bad thing? Work of the devil? What do we think?
No, it's not work of the devil, but there's no way that product can be as exact as an interior and an exterior inspection when you're actually walking through the property. The reason being is, how many houses have you seen where you drive by and it looks nice outside?
Mm-hmm.
You go inside and it looks like, oh my God,
Castle
someone threw a
Dracula.
grenade in
Yeah.
it. And it, some things goes to housekeeping, and housekeeping doesn't really make for value plus or minus. It really doesn't. But there could be damage inside.
Oh, God.
Mold.
Drywall is
Yep.
cracked, mold,
Yep.
water, all sorts of things like that. Frayed wiring that's visible, like I said.
Mm-hmm.
So from a drive-by standpoint, where I see it, and once again, my colleagues tell me, with home equity lines of credit,
Mhm.
where usually you're going to the bank and you've got either a relationship with the bank professionally, the borrower that is,
Right.
or you're borrowing far less money than typically you would do.
Yeah.
That all the bank wants to make sure is you got 4 walls and a roof.
Yes.
Essentially.
So a drive-by is fine. It's a little cheaper report, but it has to be as detailed as an exterior inspection.
The form is still the same.
Oh, the form is different.
Oh, is it?
The form is absolutely
Okay.
different. An appraisal inspection for interior and exterior has roughly 2 to 3 pages more of detail
Okay.
than a drive-by would.
Okay.
So that's why the drive would be less.
Right.
I can remember back in the late 2000s, there was a collapse in the market around 2008.
Yep.
And they singled out, they always want to blame somebody.
Mm-hmm.
I can remember they really came down hard on the appraisers. And they said, the biggest problem is all these drive-by appraisals. They're doing these, and they're giving values to anything that's not moving.
Yeah.
And I don't know how much truth there was to that, but I always thought it was interesting that they singled out the drive-by appraisal as being the demon in the pile.
Some of the banks are actually going to desktop appraisals too, which is not necessarily even a drive-by. And a desktop appraisal is merely that. The underwriter for the bank or someone else is sitting at the desk and they get Google Earth.
Yeah, I was going to
Mhm.
say
They
Google
see what
Earth.
the property looks like.
Yep.
They check MLS data, see what the property looked like
Get a lot of
picture-wise.
information. Right?
And how many?
Wow.
Typically, the bedroom count's going to be the same. The bathroom count's going to be the same. But the big issue is condition.
Right.
Yep.
And you really need someone who can go into that property and just assess: is it average in condition? Is it poor? Is it good?
Mm-hmm.
That type of thing.
Does it have granite countertops? Does it have Formica? They're
Right.
both good. They
Yeah.
do what they're supposed to do.
Yep.
Granite costs.
Well,
Yep.
that's a good point. Granite versus Formica, whatever. And people say, well, I put
Quartz, whatever.
Mhm.
But the funny part about it is people say, I just put hardwood floor in my kitchen. I just put granite countertop in my kitchen. It's got to make the property worth another $20,000, $30,000.
No.
No,
Dollar for dollar? No.
No.
never get that.
No.
No.
And the
No.
best part is, they say, I put a new roof. I just put $30,000.
It's a maintenance issue.
Yeah, it's
Yeah.
a maintenance issue,
Yeah.
and I always this is the way I explain it. Yeah, it's a maintenance issue, and you have to understand that people just I don't know why, but they just kind of expect to have a roof that doesn't leak.
Yeah, I know.
Exactly.
Part of the deal.
So the
It is,
value
yeah.
will be less with the leaky roof. Won't necessarily be more with
Right.
Exactly.
And people
Yep.
don't get
Yeah.
that. So
Well, it's like when you buy a vehicle, do you ever pay more for new tires? No, you have new
Yeah,
tires.
I just kinda expect
It's
to
an
get new
expected
tires.
thing, right?
You expect a full tank of gas and
Yeah.
good rubber on there.
Yeah, and oil in it.
yeah,
But you were mentioning something earlier. I don't mean to cut you off, but you said that there's different licenses you have to hold.
Yes, exactly. I am a New York State certified residential real estate appraiser. And I am allowed by law to appraise up to 4 units in one property, and a certified general appraiser can appraise anything from the Empire State Building down to a doghouse. I have not gotten that certification.
Is that the MRI? What is
No. That's a professional designation.
That's the big one.
That's you're a member of a club, the appraisal.
Is that the one where you can appraise horses and stuff like that?
No. Your certified general appraiser can appraise all that stuff too. Okay. And then there's a licensed appraiser, which has the same qualifications basically as me, but they can't do any federally subsidized loans. And FHA, and last I checked, FHA, Freddie Mac, and Fannie Mae are federally subsidized loans. So they basically, if you're a licensed appraiser in the state of New York, you can't do that type of
Very
work.
limited.
Very
limited. Wow.
How does one become an appraiser?
You have to take a series of classes. You have to do field work. You have to work as a apprentice for up to 2 years.
That's changed. It didn't used to be like that, right?
No, it didn't. This has all changed in the last 8 years.
And I think it's a good thing.
Oh, very much so. Absolutely.
You get a better report. You get better.
More qualified.
Right. Right. So there is a time frame. You've got to take 12 classes to finally become certified. To get rolling to work as an apprentice, you have to take 3 classes before you can get on the street. You have to be certified. You have to be supervised during the whole time.
Wow.
And the exam is somewhat of a bear. It's not.
I would think so.
Is it like a 75-hour course like real estate, or is it a? No, it's not like that.
Yeah. Oh, you mean the exam?
Or the classes leading up to it.
Well over 100 hours.
Wow. Class?
No, it's 15 and 30-hour classes.
Wow.
And you've got to take 12 of them. So if you do all the math there, it's about 120, 140 hours.
Wow.
So about twice what a real estate.
Yeah.
Twice with that, a little more detailed, a little more math oriented.
Plus the apprenticeship.
Plus the apprenticeship.
So required.
Yeah.
Exactly.
Yeah, there's no requirement.
Is that a non-paid apprenticeship?
Pardon me?
Is it like non-paid, or you just?
Well, you try to get paid.
Yeah. Well,
but that's an issue. If you want to be an appraiser, you really have to be wanting to jump into this as a career, because for your first 2 years, you're really not going to get paid a lot of money.
Yeah. Okay.
Really.
Yeah.
Because think about it. A certified appraiser has to supervise.
Right.
The appraisal company has to pay them to do their own work, plus they have to pay them to supervise you as an apprentice.
So because of these changes in the regulations and how we instruct people in the apprenticeship, are we seeing fewer people coming into the appraisal
far
business?
I would
I
imagine.
think that would. It's a great idea, but
The
law of unintended consequences, you have fewer guys coming into the business.
Yeah.
Right. The median age for an appraiser used to be probably, I would say somewhere between 45 and 55 years old.
Real estate agent, I think it's 50.
Now it's pushing 60, 65 because
Wow.
the younger people are not getting in the
Well, I mean, how could you if you're not really going to make a lot of money for 2 years?
Yeah.
Not making a lot of money. It's a long trail. I mean, so you have to. It's a big commitment.
Yeah.
Wow.
I think that's going to be a problem in 2 years. You watch.
Let's see.
On that.
Let's see. Yeah. Wow. A lot of interesting stuff. Thank you.
How are we doing on time? We
good.
we good?
Yeah, we're right
Let's
around
get
20.
a little minute to wrap up here. Issues that we're seeing in the appraisal world that the average person would be aware of.
It's all common sense, Brendan. So I don't see. There's not a lot of issues. The biggest issue, of course, is how do you keep making value and doing an appraisal on properties that have been selling for more and more and more and more? Because what I use to justify my value is prior sales that have occurred.
Right.
Mhm.
And it's almost like when you guys are out there selling, you're creating a new market every time you ring the bell and close a deal.
Yep.
Okay. Well, those deals are coming to some degree lesser and lesser. There's not a lot of inventory out there, which we know.
No.
But the values are still. It's just getting tighter and tighter and harder and harder, and that's one of the reasons we're seeing some appraisals killing deals.
Well, and I've always been amazed at how few deals actually did get killed based on the fact that you've got to use
It's getting tougher
prior
now.
sales. And it's like, you don't have prior sales supporting this price at
Now we're jumping
1,000 more.
16% year over
And
year.
how are we able to establish it? But somehow you guys are making it work.
Well, don't forget the appraisal is the appraiser is going to come up with a value, whatever they feel. The bank will ultimately decide whether they want to grant the mortgage or not,
There you go.
and that's where the dichotomy.
And if, let's say, the property doesn't appraise based on your opinion,
Yes.
can they appeal your opinion?
Absolutely.
Okay.
You get another appraisal.
Yep.
You can go to the bank and say, we disagree with the appraisal. Will you fine tune it, or not the appraisal, but will you fine tune your loan for us, or maybe a half a point higher in the rate, something like that. So ultimately, the decision on value, even though the appraiser comes up with a value on the property, the ultimate decision is really with the bank.
And as an expert, rendering an expert opinion, do you ever get called into court to substantiate your opinion?
Yeah, I have testified in federal court numerous times, not from a bank standpoint, but usually it's for an insurance issue or
Insurance.
or the matrimonial squabbles that we
Yep.
talk about, or when one company's buying out another. That type of thing.
All right, Jim, how do they get a hold of you if they want to call you and say, listen, can you tell me I need an appraisal, I'm divorcing my wife, whatever it is.
Yeah.
Well, first of
Talk
all,
to your wife first.
most of my clients are attorneys.
Okay.
So they'll call me directly. But yeah, I'm available as an appraiser 24/7. We work on weekends, etc. James E. Knight Appraisal. My number is 716-998-0199, and I am local. I am in-
Local in Western New York.
Absolutely.
You go down to Jamestown?
Absolutely.
Oh, wow, that's pretty
But I
easy.
don't go too far where I don't know the area, because then I'm not being a responsible.
Rochester?
I will go to Rochester.
Syracuse?
Not
Thank you very much.
Now we know. Now
It's
we
nice.
know the line. Yeah.
All right, that's it. Wrap it
Yeah.
up.
Please like, follow, subscribe. Thanks for tuning in. Let us know if you have any questions you want us to address.
And Brendan Cunningham, the real estate doctor, say, join us next week.
Thank you
Thank
for tuning in.